Hello everyone, in this video we are going to describe manufacturing overhead cost. Overhead costing is a part of cost accounting, which is the process used to calculate the cost of production of product or service in order to make managerial decisions. Let's see what is overhead costing. What is overhead cost? Overhead cost is all indirect cost incurred during the production. Typically, manufacturing overhead costs are office rental, business insurance, salaries, professional services, utilities, and etc. Businesses use overhead costing to fairly spread these costs across departments or products. This helps in calculating the total cost of production more accurately.
When calculating overhead cost, there are 5 steps. First step is collection of factory overhead cost. Second step is allocation of overhead cost. Third step is apportionment or distribution of overhead cost. Fourth step is redistribution of service department cost to production department. Fifth step is absorption of overhead.
Allocation and apportionment. First, let's look at allocation. Allocation means assigning the entire amount of an overhead cost to a specific department when that cost belongs only to that department. Next, we have apportionment. Apportionment means dividing a common overhead cost among two or more departments using a fair basis. This is done when a cost benefits multiple departments.
Now we will discuss about apportionment or distribution of overhead costs. When overheads are not allocable, overheads would be apportioned or distributed on types of expenses, rent, rates, and tariffs. Basis of apportionment: area occupied, floor space, insurance of stock, value of stock, insurance of other fixed assets, value of fixed assets, depreciation of fixed assets, value of fixed assets, stores overhead, value of materials, indirect wages, direct wages, indirect materials, direct materials, light and electricity expenses, VAT, X working hours or number of light points or space occupied, power, kWx working hours or HP of machine, canteen expenses, number of workers, supervisor's salary, number of workers, employee welfare expenses, number of workers, workers' compensation insurance, direct wages, general expenses, working hours or direct wages, repair and maintenance of assets, value of assets.
Let's now talk about an example. P Private Limited is a manufacturing company having 3 production departments, A, B and C, and 2 service departments, X and Y. The following is the budget for December 2019. Rent and rates 5,000. General lighting 600. Indirect wages 1,500. Power 1,500. Depreciation of machinery 10,000. Sundry expenses 10,000. Additional information. This statement shows how the total expenses are allocated among the A, B, C, D, and E department. Area 2020 25,000 and 3,000 and 2,500. Value of machinery 60,000 and 80,000 and 10,000 and 5,000 and 5,000. Machine hour 1,000, 2,000, 4,000, 1,000 and 1,000. Light points 10 and 15 and 20 and 10 and 5. Direct wages 3,000, 2,000, 3,000, 1,500, 500. Horsepower of machine 60 and 30, 50 and 10. Working hours 6,226 and 4,028, 4,066. The expenses of D and E are allocated as follows. D 20% and 30% and 50%. E 40% and 20% and 40%. You are then required to do the following. First one, a statement showing distribution of overhead. Second one, a statement showing redistribution of service department cost to production department. Third one, compute overhead recovery rate. Fourth one, ascertain total cost of an article if material cost is 50 rupees, labor cost is 30 rupees and it passes through department A, B and C for 4, 5 and 3 hours respectively. We discuss about calculate overhead cost using an example. To allocate these costs fairly, each overhead item is distributed using an appropriate basis of apportionment. This means each cost is shared depending on a factor that best represents how that cost is consumed by the departments. For example, rent and rates are distributed based on floor area of each department. General lighting is appreciated based on the number of light points. Indirect wages and sundry expenses are shared in proportion to direct wages. Power cost is allocated based on the horsepower of machinery. Depreciation is distributed based on the value of machinery in each department. After applying these bases, we prepare the statement of distribution of overhead. This statement shows how the total expenses are allocated among the 5 departments. Once all overhead are allocated, we then look at the service department D and E. Service departments do not produce goods directly, but they support production, so their cost must be transferred to production departments. After this reapportionment, the service department's total becomes 0 and the entire overhead burden is accumulated only in departments A, B and C. This collected overhead can now be used to compute overhead absorption rates and the total cost of manufacturing a product. So in summary, we first identify overheads. Second one, we allocate and appreciate cost to all department. Third one, we then redistribution service department cost to production department. Finally, we use the total in production department for cost calculation and fishing decision. Let's move on the next one. Calculate the overhead recovery rate. Overhead recovery rate equal total overhead cost divided by total machine hours. Department A 8,650 divided by 6,226 hours. For 1 hours equal 1.382. Department B 8,352.5 divided by 4,2800 for 1 hours equal 2.073. Department C 11,642.5 divided by 4,066 for 1 hours equal 2.863. Calculate of unit cost. Ascertain total cost of article if material cost is 50 rupees, labor cost is 30 rupees, and it passes through departments A, B, and C for 4, 5, and 3 hours respectively. We previously calculated the recovery rate. Department A equal 1.38 multiply 4 equal 5.52. Department B equal 2.07 multiply 5 equal 10.35. Department C equal 2.86 multiply 3 equaled 8.58. Total overhead cost per unit equal 24.45. Calculation of total unit cost. Material cost per unit equal 50 rupees. Labor cost per unit 30 rupees. Overhead cost per unit 24.45 rupees. Total unit cost per unit 104.45 rupees.
Summary and importance of overhead cost. Overhead cost means all the indirect expenses that support production, such as electricity, rent, and equipment. These costs are not directly linked to a single product, but they are a very important part of calculating the total cost. When calculating overhead cost, we first identify, allocate, and apportion these expenses to different departments. Then we find the overhead recovery rate to calculate the unit cost. Calculating overhead cost is very important for any business. It helps to find the true cost of a product or service by including all indirect expenses. It also helps in setting accurate prices, controlling unnecessary cost, and improving profit planning. Overhead costs also affect the final product price. When overheads increase, the total cost and selling price also go up. By managing overheads properly, a business can reduce waste, improve quality, and make better financial decisions. Overall, overhead costing gives a clear understanding of how money is spent and helps the company work more efficiently. Thank you for watching our video. We hope you learned something useful and enjoy the video.